Hi there. Today we're talking about bubbles, and in this case it's the Tulipmania in Holland back in the 1630s. Bitcoin and also gold bubbles. What are they? How do you recognize them? And how do you sort of compare them with others of their type, and so on and so forth. Very, very interesting, because of course the bubbles we're talking about here are economic ones, financial ones, monetary ones. Now, in relation to the tulip mania of, I think it was 1636 to 1637, that went pretty crazy. One bulb at its peak could buy you a mansion, which is pretty extraordinary. Up to 10,000 guilders, and at that time, that one guilder was a 10-gram silver piece. It was a 10-gram silver coin, so 1/3 of an ounce. So one bulb was worth up to 3,300 ounces of silver, which actually that's 100 kilos of silver. That's a lot of silver. Anyway, it's obviously quite extraordinary. At the time, it would have had, people in other countries thinking to themselves, "Wow, we really need a faculty of behavioural economics." To which someone would say, "Well, what's a faculty of economics? We don't even have one of those." I think Nassau Senior in 1820 became the first professor of economics at Oxford. Anyway, the tulip mania was the first bubble of the modern age. Then, of course, we had the South Sea bubble in England with the stock market there, and then there was one big one in France as well. And then, of course, aside from that, we've had stock market bubbles in the late 19th century and in the 20th century, which we all know about. And then people have also pointed to things like Bitcoin as a bubble. It has gone from whatever it has been, like $1 in the early days, after it was created by Satoshi Nakamoto, up to as high as $108,000. So quite the price rise. And now gold has hit $3,050 per ounce. Is that a bubble? Is Bitcoin a bubble? The tulips were a bubble. They've never really come back to being worth, multi-million, say, 5 million per bulb at its height. But what does it tell us? Because there are important comparisons to be made. And it can help us in modern economics, modern financial systems, and looking at money. And I suppose the most important thing to point out is that, and this has not been pointed out by other people, it shows the human desire, to some extent, for diversification. So, I mean, you had property in Holland, they could buy a mansion. You had bullion cash, silver cash, so a bullion-backed currency. You had artwork, you had all sorts of things that you could buy, yet people wanted these tulip bulbs, and it became a mania. It sort of fed on itself, and it became a thing, a meme, almost. Up it went, probably the first meme bubble. But I think it shows human desire for diversification into other assets. So on the one side of the coin, it's about risk favorability, being prepared to take wild risk to the upside, but also it shows the desire to have different things as well, which is almost like risk mitigation, if it's done properly, of course. If it's done properly. There's also the concept that people think there's something over the fence, the greener grass over the fence or over the horizon, and when people start coalescing around this concept, whether it be a tulip bulb or something else, people jump on and think, yeah, well, that was the thing that was going to make us the fortune. That was the thing that's always been over the horizon or over the fence that I could make money on. And so they chase it for that reason. And Ben Horowitz, who wrote The Hard Thing About Hard Things, points out that the market is not always right, far from it. It's more the case that the market is very good about coalescing around a conclusion, but that conclusion that the market's coalesced around and acted on is very often wrong. And that is probably true. I think it was Mark Twain who said, it's not the things that are wrong that get you in trouble, it's the things that you're absolutely certain of that just ain't so. And that's probably a bubble in a nutshell, although that really is mixing metaphors now. Okay, so let's talk about Bitcoin and gold. What about them? Bitcoin hasn't lost 99.99% of its value. From its height, it's lost maybe 30%. It'll probably keep on going. It makes higher lows. Every time it goes down, it makes a higher low and keeps on going. And what about gold? Wasn't it John Maynard Keynes, the great economist, who told us that gold was a barbaric and or useless relic? Well, gold's still with us, and Bitcoin looks like it keeps on going up. Well, that's because things are very systematized these days. We have hundreds of trillions of dollars of currency, different currencies globally, property, loan instruments, all sorts of paper assets like shares, options, derivatives, so on and so forth, into the thousands of trillions. It's gigantic, especially if you take into account contingent liabilities, so on and so forth. Paper assets and digital assets are gigantic in nature, well over greater than 1,000 trillion US dollars worth globally. Now, the thing about gold is that it's a hard asset, and so people, and why it probably has a future as a hard asset, is because unlike paper currency or paper or shares or options or debt instruments, so on and so forth, it's real. It's got a value across time, across cultures, across countries. So it's got super value because it has value across time, across countries, across cultures, across jurisdictions. So it's the value max of gold, and king value is gold because it's got that value over time, over cultures, over countries, geographical locations, and jurisdictions. So that's value across four things. The value of four, as it were, makes it very valuable. Okay, and people are buying it back up now, and it's over 3,000 US an ounce. Some gold bulls would say it's still probably pretty low. It may well be, I don't know, in terms of the charting of it. But the point is, it's here and it's still on the rise. Okay. Now, Bitcoin is not a fiat currency. It's not printed by a central bank. That's the point. That's the value. If you say, well, what's the value of Bitcoin? What's the good of it? Well, the good of it is that it wasn't produced by the Federal Reserve in America, or by the Swiss, or by the European Union, the European Central Bank, or the IMF, or the World Bank. Bitcoin was not created by a bank. It's not fiat currency. It doesn't come from a central bank. That's its value in terms of what it's not. And now you might say, well, that's a pretty limited value. Well, guess what? There's a lot of central banks globally, and they printed a lot of money in the hundreds of trillions and trillions, especially if you added in the Zimbabwe government that printed $100 trillion notes. Obviously you wouldn't, because that was hyperinflation. But the reality is that Bitcoin has that value aspect to it, that it was not created by a central bank, and it's limited in number, and the owners of it trust it inherently, right? Because the owners of it are practically the minters and printers of it, as the miners of it. right? So that's the value of Bitcoin. So will it go down? Well, probably not. It's probably very hard for it to go down, right? In the same way it's very hard for people to stop using gold. Will we stop using fiat currencies? No, because they're so easy to use and because there's so many transactions you can do in it. Tulips you can do without, although people haven't, but you don't need to pay 5 million a throw for it. But it basically explains the value behind all of these things, which is human behavior. Okay? And human behavior dictate the use of paper currencies and paper assets. That then dictates the need for Bitcoin, and that then equals the long-term need for gold, which has already demonstrated value across time, geographies, cultures, and jurisdictions. So there you go. Paper, fiat currencies, Bitcoin and gold are hand in hand in terms of value. And they're not going anywhere, and there will be bubbles, but they'll keep on going. Anyway, let me know what you think. Andrew@keops.com.au. Thanks.